The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. All right, folks, we're going to start off with the German DAX, followed by the FTSE. I usually post those. You can see they are also in a continued uptrend as the world continues to get through this coronavirus. We'll have Shane on at 9:30 with his usual section about the Fed and the stock market and stuff, but yesterday he was kind enough to come on and tell us about the disease and stuff, and the deaths are down, but there's more people getting it, so that's not good, but there's never anything good and there's never anything bad, because when the only way is up, the only way is down. And the real proof of that yesterday, folks, was last night when our wonderful negotiator, Peter Navarro, let's get him up here so we can talk to old Pedro a little bit. He came out and he said, it looks like that this Chinese deal is kaput. And the stock market dropped 400 points. You can see it there. That was about 5 o'clock in the afternoon. And by the time you blinked your eye, the trade agreement was back on again. All of his friends were able to buy down there at the exact 61% retracement at 30.66. And here we are, 80 handles higher today, and everybody's happy. Now, you wouldn't think that would happen, but of course not. Things like that don't happen in the market. Shut the front door and raise the rent. What are you talking about? Folks, yesterday, he called me. I won't tell you what he called me, Duffy. Anyway, let's take a quick look here. Larry Williams gave a really good talk yesterday to the Foundation for the Study of Cycles, and also Sherman McClellan was on. Sherman's about 90 now, and he talked about some of the things he looks at, but a couple of these charts I think will be interesting for us, to really take a look at. But before we get to that, yesterday we were talking about the three drive to a bottom pattern that occurred here. Let's get this up here so we can see it in the euro, and you'll see where we are. We were trading, we had this really quick move up here to 112.62. Beautiful three drive to a bottom, big ABCD going back to June, signifying a really significant bottom in here, which means the U.S. dollar most probably was getting ready, to roll over. And as you can see here, what's happening to the euro over the past 24 hours, it's had a very, very strong move. We're trading up around that 113.50 now, heading for 113.75. So that's a very important number. And the reason why I'm bringing this up is I get bombarded all the time about these conspiracy theories about the collapse of the U.S. dollar, the strength of the U.S. dollar. You pays your money and takes your choice, whichever one you want to pick. But that's you have to decide by looking at the charts whether you want to be a buyer or seller. The reason why the U.S. dollar was so important, folks, if you remember, if those of you that get the newsletter, we focused on the fact that we had just made that 382 retracement. It took 10 days to make a 382 retracement up there at 97.50. That's with the equivalent to the euro down there at 111.90. It made a lower low on Sunday night by one tick, which was, rather surprising anyway. But those are the things that you're looking at when you're a technician. You have to use, market feedback. What is the market really trying to tell you? And when you get down there and you make a lower low by one pip on the most actively traded thing in the whole world, you should pay attention to that, because that means there was absolutely no selling down there. And that's the main thing. I didn't see it till a little bit later because it was early in the afternoon, and I didn't do anything until later in the morning. But you could see that three drive pattern coming in and the importance of that 382 in the dollar index, and that's why you come up with those numbers. But let's just take a look at Sherman McClellan. So this is the one that I thought was pretty good. And let's just get this up here, folks, because this is a prediction now for the whole year. So so far it's been pretty good. So pay attention to it. Sherman's been around a long time, and we'll watch it to see what's going to happen here. You'll notice these are the dates that he's marked up here, and as you can see, he's looking for a high to come in around June 8th, and of course, I believe that is June 8th. And June 8th. And of course, here we are on the 23rd, and we're still going up. So maybe this one's not working, but this is what he had worked on. And he does this a whole year in advance. And you'll notice that he had the high pretty close there in January and again in February. So both of those were spot on. So keep in mind that what we're looking at, none of the stuff that Sherwin does has anything related to astrology. A lot of it's related to oscillators and things like that. But he's been around for a long time. His son Tom has taken over the business. But Sherwin was there last night along with Larry Williams, and it was really quite interesting. The next one I wanted to show you here is the one from, this is the one from Larry Williams that was really interesting. This is his election year cycle, and he publishes this a year in advance during election years. And as you can see here, we had a low here in the market right around the 18th. And as you can see here, he's looking for another low around the July the 16th. And you'll notice he's in this, just where we are right now is a little flat period. And so he's looking for a little top to come in here and then the market to continue to go up. They didn't say anything about who was going to be elected. They didn't get into that at all. And that's probably a good thing. I don't know. All I know, folks, I'm going to get on my soapbox here for just about 30 seconds. But I think the most damaging thing that I've seen in the United States, forget the fake news and everything else, but when they start tearing down the monuments of the people that built this country, we're in big trouble. I mean, this is really bad, folks. I mean, this is how Hitler did it, and all these other guys. They go in and they destroy the history of the country, and then they destroy the country. So this is not good. I mean, to take down Andrew Jackson, folks. If it weren't for Andrew Jackson, we would all be speaking German because the Germans would have beat, the Brits, and the Brits would have beat us. I mean, this is insane. And then the worst one of all. I mean, they're all bad. I can understand. Thomas Jefferson. Sure, he was a slave owner, but everybody else was too back in those days. Things were different then. But to take down Teddy Roosevelt, do you know that museum there in New York was built by his father and all the stuff in it came from his father? I mean, that's just insane. And now they want to take that down? My goodness, that's not good. Okay, I'm off my soapbox and back onto the old markets to look at. We have a request about the crude oil market, and I believe we're in a topping area for crude oil. The problem is I think we're going to get to 4,200 in the crude. Give me 1 second here, and I'll get this up so you can take a quick look at it. But I believe that's where we're going to get to in the crude. See, we've continued through this double top here. Oh, shucks. Stop the front door and raise the rent. Doggone it. Give me a second here. I'll get this right here. Those of you that want to watch that video for the cycles thing, I think you can get it and check out because they've got a link that you can, get to it. If you can't get it, just give me drop me an email, larrypesavento@gmail.com, and I'll forward the link on to you, and you can watch 2 hours of it, and it's very entertaining. Anytime you can get somebody like Larry Williams for an hour, it's worth it, folks. I've known Larry for over 50 years, and I'll tell you, he is really good at what he does, and he spends a lot of time and money on research, and the quality of research is pretty good. Marshall's telling us it's on YouTube. So, Marshall, you want to tell the folks how they can reach that on YouTube, and that will make it a little bit easier on the old cowboy here. Take a look at it. We lost our fire department up on Mount Lemmon a couple nights ago, folks. It just totally disappeared.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I wanted to continue on with some of the things that they were showing us from the Cycles program yesterday. And as Marshall was kind enough to post it in the room there, if you'd like to take a look at it, you'll be able to see it clearly. Here was the secondary picture of what he was looking at on a longer-term basis, and that tells us that this is the same one from Sherwin McClellan. I bring this up because he was pretty confident that we were over a top here today. So I'll bring this up here so you can take a look at it. But you can see here at 622, which was yesterday, he believes we're in a topping zone where we'll probably be chopping around for a little bit and then, continue on with those dates. So we'll watch those dates because anytime someone that's done as much work as he and his son have done, it's a very, very important. I first met him back in 1969, and I believe that's when he first started his business. And he was a good friend of Richard Russell, and he also is a friend of Arch Crawford. I didn't know him that well. He didn't trade out of the Conti office. I'm not sure even where he traded, but he was not in that group, so I didn't get too much off with it. Someone's asked me to share one of the stories from some of my favorite stories from the Drexel's days and stuff, and I'll tell you, I got so many of them, but one of them came to my mind over the weekend because it happened to be Father's Day, and my young one, Laren, called me and was telling me, and she were talking about all the fun things that we had done. And when she had just gotten accepted to go to school back east, and in college, and I gave her a choice when she graduated from University of California, Berkeley. She graduated magna cum laude, which was really great, and so I told her, I said, you can have anything you want within reason. And I said, if you want a new car, you can have a new car. She said, Dad, I want to go around the world. And I said, if that's what you want to do, then that's what you want to do. And I said, how much are you going to need? And she said, I think I'm going to need about $3,000. I said, Laren, you're going to be gone 6 weeks. You're going around the world on $3,000. And she said, yes, I think we can do it. And she was going with two of her little buddies from Westlake Village. And they had gone to different schools, but they wanted to do this trip. And so they did. They stayed with friends all over the world. world. But they went all the way around the world. I gave her $6,000 to go to do the trip, and she came back with $2,000 left over, which she was going to need. But anyway, that was the fun part. But the interesting part is one of the girls that was there, she was a really big fan of Charlie's Angels, and hold on one second here. Anyway, whenever they had whenever I went to the racetrack, oh my goodness, I'm having a mind. Oh dear, I wish I hadn't have done this, and I've lost the gentleman's mind. Boy, this is a bad sign when this happens. I'll have to remember. What was the guy? It wasn't Ephraim Zimbalist Jr., but oh dear, come on, Larry, it's John Forsythe. Anyway, John Forsythe, she was a big fan of John Forsythe and Charlie's Angels, and Laren had seen him at the track once and got to say hello to him, and they wanted to know if they could go down to Hollywood Park and have lunch and maybe meet him. And so I called a fellow there that I knew, Ruben Alvarez, who was a maitre d', and I told him, I said, my daughter's coming in with her friend. I said, does John Forsythe still come in? She said, oh yeah, he's here all the time. And he says, well, see if you can set the two kids near him and just get him to come over and say hello. He said, I'll do better than that. He said, I'll set him at his table. And so they got to sit with him for about 3 hours, and they just had the most wonderful time. He picked up the check, gave him an autograph picture and everything, and it was really, really quite exciting. So that was one of the things that I had remembered. Now, as I talk about this, I'm thinking of 5 or 6 more that were really funny. Anyway, let's move on. I've been so lucky, folks. God darn, here I am at the 8th furlong pole, and I'm looking at, I'm doing this every morning and stuff. And I chatted with Larry Williams yesterday, and he's a year younger than me. And he said, Larry, he said, we're just really lucky that we can do this. And I said, yeah, you're really right. I said, look at John Hill. He's 95 now. He's still going strong. I don't know if I'm going to be here at 95, but if I am, I hope to be still on the air. You just never know. But that's the good part of this. We're going to have Shane on in 3 minutes, and then we'll be able to get some really good information for you. But remember that the importance of that number that we're looking at in the dollar index, folks, because this is the one that's in the news all the time about the U.S. dollar collapsing. I'm going to bring this up because it's that important. If we don't get above this 97.80 pretty quickly, and we go below this important support that's down here, and we break below that, we're going to be looking at the euro going a lot higher, and the British pound and everything else too. And that means that the U.S. dollar, maybe because they're printing money so much, that's going to push the dollar down. Now, I'm just reflecting on looking at the charts. I know diddly squat about the fundamentals, as you all know, but that's something that we need to at least keep in our mind, that's what we have to be watching for sure. That's the main thing. Now, let's take a quick look at the Treasury bonds. But before we do that, I want to show you the Dow Jones Industrial Average, okay? You can see here that we're far, far from our highs that were made back there at 27,700. We had the big move down on Sunday night. You could see that. That was on the 22nd. We had one on, remember, the Sunday night before on the 15th, the same thing. This one stopped right at the 61% retracement Sunday night. We've had a really nice 2-day rally going into today, and we're coming back up and making an ABCD up here around 26,400. Now, we've made new highs in the NASDAQ. Let's get up here to give you an idea how strong this market is, because this is not quite up to date this morning, folks, because I haven't been able to repost it. But give me a second. You'll see here that we've made a new high in the NASDAQ above that 10,150. We're at 10,180 right now. So that's a sign that we've made a higher high, and most of that, more than 25% of that is Microsoft, which is above 202, and Apple, which is 369, $1.6 trillion company, folks. If you can believe that, $1.6 trillion. Now that's a lot of shekels, no matter how you look at it. So when you're trading the NASDAQ, make sure you look at the charts of Microsoft and Apple, because that's a big, big influence, because those are cap weighted and they're very, very expensive, and rightly so, because they brought so much to the economy that they should be doing that. So we'll have to see what's going on. Anyway, we'll see what's going on. Yep, the gold is acting pretty good here. Hold on one second here. We'll get up here and take a quick look at it. It should here. We just made new highs at 1780. I posted that gold chart. I didn't do it this morning. I meant to do it right now. We are looking for higher prices in the gold. You'll see here that we had a really nice ABCD, double ABCDs, and the big one up here is at 1788. We're at 1780 right now. So watch that 1788, 1790, folks. That's the old high going back into May. That could be a monster double top. And if we get above that, and we get above 1800, folks, you could be looking at something very close to those old highs at $1,931 an ounce that hit on August the 11th, August 20th of 2011. So this is a very strong market continuing to go higher, and we'll see. Yesterday we had that beautiful pattern in the silver, the 135 pattern. It broke 36 cents, the harmonic number in silver, 36 cents. Silver broke down to 1770 and has now gone back and is trading near the old highs again. So watch it very, very close. Okay.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to belly up to the juice bar and see how the Fed is serving their fresh juices today. Shane, how are you, my friend?
Good morning, Larry. How are you?
I'm living the dream, baby. You got the mic. Go right ahead.
Thank you. Good morning to everybody, too, out there at TFNN. Okay, so I'm going to start out here with the Fear and Greed Index first. I'd like to start out with this just to get a general idea of how the sentiment is moving on the market And right now, the meter is right at 53. It's generally in that this is a neutral position. And so we really only saw this get up to about 65 on that recent rally. So it never really pushed to that extreme greed level. So this still suggests that the rally can continue to extend here if we can get some more buying coming in. This next chart here this is a graph of the fear and greed. You can see that back here in January it hit its all-time peak, and then these are the March lows. And then we got somewhere up here in the high 60s, and we're just kind of in this mid-level range here. So nothing too exciting either way, but definitely not an bought or oversold level.
Hey, Shane, we have a question from one of our listeners, and that is, how do you determine that fear and greed index? Is that proprietary or?
No, this is not my indicator. This is actually an indicator from CNN. So this is,
okay.
You can go. So if you go to CNN Business, and it's the Fear and Greed Index, and it's a combination of. The reason I like this one is it's a combination of multiple things. It's a combination of stock price breadth, safe haven demand, put and call options, stock price strength, junk bond demand, market momentum, market volatility, and so it takes all of those factors and puts them together. So I like it because it's a broad-based sentiment indicator. It's not just looking at one particular market.
Wow, that's good.
Yeah. So, I mean, anybody can go to see this. This is the corona cases, and I spoke about this yesterday briefly, and I'll just hit on some key points here instead of just going to these endless graphs. But the number of cases is spiking nationwide. There's severe spikes in Florida, Texas, California, and North Carolina, but the deaths are not surging with the new cases. So one Italian doctor speculated the disease intensity may be decreasing, and then that's good. So maybe we're building up antibodies to it. And there are some transits coming up. So that the shutdown transit that came on near the March lows, that's coming back in August. And that was on the Aries point. That was the exact Aries point. And then the solar eclipse also passed on the Aries point. So I think August 4th is the date, somewhere around that time, that we need to watch. I'll give more specifics in the newsletter as that comes up. But we're definitely coming up to some sensitive points here. And that eclipse, I think, highlights, what's going on. And briefly here, this is a graph of Florida. So obviously, Florida is going exponential with the cases, but the number of deaths is really just flattening out, which is good. So this is the planetary speed index, which is something that I watch. It hit an important low for the year. We just came into an important low, and it's on the rise right now, but the Fed juice is in a sell, so the market's really just kind of drifting around sideways, not doing too much. This is a bird's eye view. I like to do this. I don't trade too much with moving averages, but I think this is nice to see the 200-day versus the 500-day on the S&P. And you can see these lines remained relatively stable even during this big corona decline. It's just I like this, the way that this looks. It's relatively stable. You still have a good separation between the 200 and the 500. And on that recent decline, it came off the 200. We just passed through the solar eclipse, and then there's another lunar eclipse coming up on July the 3rd. So those can tend to be topping patterns, and you and I both know that on holidays it tends to be bullish going into them. So maybe we'll be seeing another high near that July 3rd date. This is the S&P, just to give you a summary of where we are right now. This is we're really just in a period of no advantage. It's just kind of drifting around. The last two upside positions we had, this is really treacherous trading here. But if you go back here to 519, you can see where I label here where it says number 1. That was the last upside advantage where there was an upside here. Then we were out because there was no advantage, and it went up. It came back down, did this big dip, and then the next upside advantage came right here. This was the next long position here. And now we're just sitting out again. So this is treacherous territory here. This S&P is extremely volatile. And I still believe there's an upward bias here, but it's just tough. You got to really be careful about picking these entry points. And so right now there's just nothing, we don't have an advantage because the planetary speed index is in a buy, which I just showed you, but the Fed juice is in a sell. So when you get those two in opposition, the market tends to just kind of, there's no advantage. So you get a lot of this wobbling around. And that's just not something that I'm interested in. I want a clear advantage on the markets. So I wait until we get all the odds put in our favor. And that's when I tend to try to pick these plays. So that's the idea there on these plays. So next chart here. So I want to talk about quantitative easing here. So I did a presentation on this last week, and I did a webinar on kind of the history of QE and Fed juice mania. But it really began in the fall of 2008. For those of you who don't know, it actually began before the March lows. And then the markets bottomed in March of 2009. And then, of course, there was a period where the Fed tried to sell off the bonds for the first time. And that's important because here's where QE1 started. And again, this is like a history of the QE and how I started tracking this Fed juice. Started back here in 2008. And then we had these March lows into here. Now, there was a period here where Ben Bernanke tried to actually sell off the balance sheet. And this is where he tried to sell it off into here. And he started to see the market really get weak. And this was a very defining moment for the markets in the history books, because this is when he realized that they could never sell off the bonds. And he started up again. He went full speed with the quantitative easing. And then it went all the way up until the period where QE1 ended. And then, of course, right when it ended, the market started faltering again into here. So I highlighted this moment just to kind of give you the starting point, the genesis of QE, and then the realization here when Bernanke realized that there was no turning back at this point, that they had to keep the juice going. And then, of course, the QE1 ended here. Now, for those of you who have followed me for a few years, back in 2011, I did have a newsletter, and I started to talk about a major top that was coming into the markets at the end of QE2. So this chart shows the next round here. This is QE2, where it started back here in 2010, and then it ended right here going into the summer of 2011. Now, I was trading the markets and writing this newsletter, and there was a period here where I started to call a major top into here. Now, the reason why that this top call worked was because the Fed had ended quantitative easing. So when the Fed gets out of the quantitative easing, that's when the Astro and all the cycles and all the stuff that we do here, and you talk about a lot, Larry, the Bradley, things like that, that's when these start to work again. So I put out the newsletter, and I was talking, this was just a graph from the newsletter that I put out, and I was just highlighting what I just showed you. You know, this was the QE1, this is where Bernanke tried to solve the balance sheet, this is where QE1 ended, and the market faltered, and then it started rallying again. And it was all the way up here to QE2. And this is where I told people that we were near a top.
Hey, we're going to pay a few bills. We'll be right back with Shane Smolian, wolftrader.com. Stay with us, Shane.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit direction TFNinvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. And Shane, I've got two quick questions for you. Question one is, where do you get your data that you look at for all the stuff that you've got so many things that you're looking at? Do you have multiple sources for the data? That's question one.
Which data? I don't mean to interrupt you. Which data are you talking about? I think Astro data or Fed data?
I believe it's Fed data.
Okay, so this is all public record. All of this information is public record. What I do is I write it all down. I study it and on multiple time frames because a lot of these maturities are short. Some of them are short term, some of them are long term, and then I put them all together to create what I call the Fed juice. So it just takes a lot of work to go through all the data and understand, especially now with all the new tools of the Fed. But this is all public record published by the Fed, and the U.S. Fed is actually very good about publishing this. The European Union is terrible about it, but the U.S. Fed is very good about it. So it's out there. It just takes a lot of work.
Wow. Well, you've shown us over the years that you've certainly dug it out. You've been talking to us for several years about this, so it's certainly something to pay attention to. Go ahead, my friend. That was the answer to both questions at the same time.
Sure.
So go ahead.
Sure. Okay. So I'm just turning back the time machine here, and I think it's appropriate because we have Mercury retrograde right now and all these retrograde planets. But this is 2011, and I was talking about. I said, look, combined cycles have peaked. This is using multiple cycles. So this is the S&P here, and this was the Dow, and then this was a long-term cycle. So I had all these cycles peaking right before this August, and nobody was talking about a market crash. And I was saying, look, it's going to crash. And I didn't understand about the Fed at this time. I just knew that all of a sudden the astrology started working again. So I was like, look, and I said this before the crash. I said it's time for a turn lower. And back then, my newsletters were like 3 pages. I mean, now, they're much more sophisticated. But I actually gave a date. I said August 9th was going to be the low of these markets when it did turn. And everyone was like, no, this is the summer. In the summertime, there's never a crash. I said, no, it's going to crash. There's a lot going on here. And when you don't have a Fed there, when the QE is over, this stuff works great. So I said August the 9th. So let's see what actually happened here. When you take a look, you can see this red box right here. This is where I was calling this top into here, where I draw the arrow. It actually bottomed on August the 8th. So I got that within a day. And I was feeling pretty good about myself at that point. I was like, wow, I think I'm getting this stuff down, this forecasting. I think we can do this. And then all of a sudden, you started getting more operations by the Fed. And then you got the LTRO into here, which was the European version. And then you just started to see these markets rally, and the Fed juice started, it followed exactly what the Fed juice did down here. And all of a sudden the Astro stopped working again. So really you have to play in harmony with the Fed. And I didn't understand this at that time. Now I understand it. And so that's now why whenever, I give forecasts or updates, it's always going to be in harmony with what the Fed is doing. Because the Fed plays such a big role, especially like if you could take some of these intraday trades. This was in March. This is when the Fed was in their nuclear phase. That's what I call when they were doing up to $82 billion a day. But you can see that every time the Fed came in, the market wanted to come off these lows. And so this is something that you really can't forecast this using any kind of cycle work or anything like that, because this is really just direct intervention into the markets. Now, this was an extreme case when the market was falling, but these are things you have to pay attention to, because you can't see this with cycles or price. This is an outside force, and this is an exogenous variable coming in affecting the markets. So I just wanted to point this out, because I know so many people for so many years we've been programmed just to look at just price, and price is the only thing. But in this case, it is very important to pay attention to the Fed, and that's what we do. Now, a lot of people ask me, are we in a bubble? And if you just look at the price, you might think that we are, but I would definitely, my answer to that is we're probably not in a bubble. Extended prices does not mean a bubble. Okay, and in the past, before the Fed, it did mean a bubble, okay? But now, not so much. The Fed juice does not mean a bubble. So when you price the S&P in terms of the Fed juice, okay, so the S&P is priced in dollars. We know that's US dollars. But when you price in terms of the Fed juice, the S&P is actually at a major low, not a high. It's at a low. And so people might look at that and say, what are you talking about? The S&P is so high. How could that possibly be true? And the way that I can do this is I've showed this. I think I've showed this chart before, but this is the S&P right now, and this is the Fed juice at the top. And you can see the Fed juice is very strong still. I feel very good about this market right now. I don't see any faltering in this Fed juice. But down at the very, very bottom down here, you can see this graph, right? You see this graph down here, and that's the graph. That's what I call the true price of the S&P. Because I price it in terms of what the Fed is doing. So it's like an inflationary adjusted S&P, and it's hitting these lows down here. You can see that it's falling and falling and falling, and it actually came below this line here. And so what does that mean? Why do we care about that line? It just looks like an oscillator, right? Well, we can go back and we can study what has happened to the S&P every time it breaks below that line on the weekly time frame, and since 2009. So when we go back and we do that, what we see is that every time it hits these lows, which down here, again, this is what I call the true price of the S&P. Every time it hits these lows, it tends to have a rally for 2 to 3 years. So you can see back here, this is 2012. It hits a low down here, and it rallies for 3 years. Okay, it goes all the way out. And then again, once again, back into 2016, it hits a low. And then you got a 2-year rally here. So if we go back and study what actually happened with the Fed and the Fed juice and the true price of the S&P, which is what I call down here, every time it goes down to those levels, it tends to rally. So if you just look at the price, you might say, man, this thing is really high. I don't know. It looks high. But when you price it in terms of what the Fed is doing, and because the Fed is working in harmony with these markets, it suggests that we're probably going to have a rally coming, okay? So it's probably going to be a rally coming just for a few years. So that's what it suggests at least, okay? So that's on that weekly time frame. Now, this is just a daily version of the Fed juice. So this is more of a zoom in, just to show everybody how cleanly these markets respond to what the Fed is doing. And I know this is a little bit overwhelming, but I'm just trying to hammer the point home that the market is essentially trading in harmony with what the Fed is doing. If you go back here on the graph, this is a graph labeled, A through I alphabetically. And on the left here, you can see that, when this Fed juice rises, the market starts to rise. When it peaks like this, the market peaks in the letter B. On the letter C, when the Fed juice falls, the market falls. On the letter D, when the Fed juice is rising, the market rises, etc. I mean, it just follows this over and over again through history. Now, one point here on this graph that I think is important is that during the coronavirus here, this is the first time that the market actually led the Fed juice. You see how the market declined here and the Fed juice was still rising here? So this was the very first time since 2009 that I had ever seen. I don't know if I call it a breakdown in the Fed juice, but this is the first time that I saw the market leading the Fed like this. But eventually, the market did turn because the Fed was persistent like this, and the market did eventually head back up with the Fed juice. So, we've got
to pay a few bills. Stay with us, and we'll be right back, Shane. Well, one more segment.
Sure.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, BAM! As well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Shane Smolian, wolftrader.com. Shane, you want to continue, please, and be sure to tell the folks how they can reach you.
Sure. You guys can reach me at multiple ways. Okay, first of all, the website is wolftraderfutures.com. There's a Twitter, which is at wolftrader, FUTU1. And also there's a Facebook page that we've started. And I'm really excited about that because I can post like nice lengthy posts there that don't get cut off like Twitter. So that's also Wolf Trader Futures. And if you go to the website, there's a free email sign-up list. And if you sign up within the last month and you try to sign up again because there was a glitch with the email, it's at wolftraderfutures.com, and you go to, there's a free email list on the homepage. Sign up there, and it will automatically start to give you information about the services and also about, media appearances, updates, things that are going on. Sometimes I'll give out charts about the market so you can get an idea of what's going on. So make sure you sign up for that list. There's also a free member area, but you can sign up for that list. And just to give you a brief overview here, these newsletters, I have 5 newsletters coming out. The energy newsletter is actually coming out July 1st. Obviously, there's the S&P, but we also have metals. We have currencies, which is the same as Forex. And then we also have the cryptocurrencies. So each of these is a 7-day money-back trial. So you can just try them out if you want. You get a lot of information there. And then on the websites, I also post interim updates as needed. And like, for example, we just had this eclipse and we have the Mercury retrograde. So on the website, I'll give interim updates if there's an event coming up in the market. So you can go there and you can check that out. So when you go to the page, if you do want to sign up, it'll be under the pricing plans, which is up there in the upper left tab of the corner of the page. So go there and check it out. It can't hurt. Definitely join the Facebook group. I think we're having a lot of fun there, and we're getting a lot of good feedback from the customers. And I think it's a good group of people with, kind of like-minded views of the markets. And I think we're definitely helping to educate people about the Fed and educate people about these astrological cycles and how they affect the markets.
Well, listen, thanks for joining us, my friend. We'll have you on again next month, which is coming up soon. So be safe and be social distancing, and we'll see you soon, okay?
Thank you, Larry. Take care. Have a great morning, everybody.
WolfTrader.com. 877-927-6648. We'll see you on the flip side tomorrow, folks.